she your best friend? Anyone? For new company secretaries? For any doubts, for any advice, for any queries, who do you seek for information? Thank you, Lee. Company secretary. Okay, so your company secretary is the officer that you have appointed. Who appoints a company secretary? You, the director, in your company. Okay, so you are the person who are managing a company, and the company secretary helps you to manage the company. And he or she who has been appointed as a company secretary is the chief administrative officer of the company you have been appointed as a director. Different from a business. Okay, someone replied to my question by saying, the moment you pay secretarial fees, you know that it is a company. That's very interesting. Do you know why? Okay. In Malaysia, when it comes to a practical approach, many company secretaries choose to provide secretarial services, which means they act as an external company secretaries. Okay, they don't work for you, but they provide services. You don't pay them monthly salaries, but you pay them amount of fee for the services they provide. And these company secretaries uses a vehicle. It could be a management enterprise. It could be a business, an LLP, or any entity to provide that services. And they also provide services to form a business, to register a partnership. And you do pay for their services. So be clear, what fees do you pay, and for what reason are you paying the service provider? Always be clear that a company secretary must be a human being. In simple words, a natural legal person, which means a company secretary must have an IC number. Okay, it should not be a management enterprise. So when you are paying a management enterprise, be clear, are you paying for a company, or are you paying for the services provided to form a business or to register a partnership? Or perhaps you are paying them for any accounting services. Okay, so be clear on who is the person that you must know. There must be one natural human being. Unlike auditors, when you have an audit firm, you have appointed an auditor. Perhaps, for example, maybe you appoint Ernst & Young, for example. So you don't appoint a person. You only know who is your audit partner in the financial statements, correct? Unlike the situation when it comes to audit firms, when you appoint a company secretary, the person who acts as a company secretary through management services providers must be named. For example, Mr. A, Mr. A with an IC number must appear in your company records. Okay, any questions regarding external company secretaries and internal company secretaries? For new directors? William, did I make it clear? I think you were the one who said when you pay the fee, you know it's a company. No questions? New directors, C for clear, CO for confused. I'm waiting. I'm looking at the chat box. Silent means you are sleeping. Where is it? I don't see any answers. Okay, there's only one clear. Any COs? No COs? Thank you. May I proceed? Why for proceed? Okay. Thank you, Andrew. Okay, let's look at the differences between enterprise, a sole proprietor, or a partnership, okay, and a company. A company which comes with the name Sindria and Berhad, or Berhad without the name Berhad, has its own identity. For example, it will separate you and the company. It has his or her, it depends how you treat your company as, own identity. If you have been appointed as a director of the company, or you own shares in a company, you and the company are still not the same. Okay? There will be a veil, a curtain between you and the company. That is called separate legal entity. Okay? The company is a completely separate entity from the directors and from the members. Okay? This is explained in the case law previously, Solomon versus Solomon. I will go back to that. Okay? So the liability of the owners and shareholders. Okay? When I say owners and shareholders, I am actually referring to the members of a company. If it is a company limited by shares, the shareholders. If it is a company limited by guarantee, it is the members, the guarantee holders. So if you have a certain amount of shares, your liability is limited to that amount of shares only. Okay? Continuous existence. When you when you incorporate a company, the company stays alive no matter how sick the company goes until and unless you kill the company. Okay, that is a very layman of me saying the analogy of a company does not die. Okay, it's immortal. Different from a business, sole proprietor or partnership, the moment the owners exit from the business, the entity will be considered as lapsed. Okay, the business is no more there; it's dead. Okay, when you borrow money from any financial institution, for example, using a company's document, a company, you borrow money from bank using Sindria Berhad. The bank will consider Sindria Berhad as the borrower and not you. So who must pay the Sindria Berhad? The payment must be done from the bank account of Sindria Berhad to the bank and not from your personal bank account. So anything goes wrong, the company, just say the company faces in the process of liquidation, and it could not pay back the bank will not come after you, no matter you are a majority shareholder or a director of the company. And it's different if you have a business. Okay, your money is the company's money, the company's money is your money, in a very simple way of explaining. Okay, so it is more secure if you're looking from that point of view to incorporate a company. But however, on the other side, incorporating a company, you must have bear more responsibilities, more literally, relatively costly when it comes to your monthly fees and maintenance. Okay, you need to put effort to close a company, unlike a business. Then assets, you may want to buy a company car under the company's name, but for you to use the company's car, you must have a director's resolution that allows you to use the car even though you are the only director in the company, because it has the concept of you and your company are two separate legal entities. Okay, car is an example I give you as an asset. It can be a land, it can be a property. Okay, and taxation. You will have corporate tax incentives, and you need to pay corporate tax when this is a company. Unlike businesses, you don't have the taxation goes to the individual behind the business. And okay, so winding up and striking off is how you close a company. When it comes to business, you don't need to go through a tedious process of closing it. Okay, let's go back to the previous slide. This is separate legal entity. This slide and the previous slide are connected. Okay, so if you look at the current act, which you don't have under 1965 Act, we have clearly mentioned that under Section 20 and Section 21. A summary of this case is a very old case. This is from the name, you will know this is not a Malaysian case, but this was, I would say, a very basic case law to explain the existence, I would say not existence, how the concept of separate legal entity started. Okay, in this case, you will see the owner, which is Aaron Solomon, who is a boot manufacturer. He started a business. Over here, don't focus at how he changed the business into a company. That is not the idea here. We are looking at a Solomon Company Limited. Okay, from the point it becomes a limited, a company. Okay. He is the majority shareholder with 20,001 shares, a wife and 5 children. So that means the total is 20,007 shares. And what happened? The company was going through hard time, liquidated, and the members, who are the members here? The wife, the children, 5 of them, and the majority shareholder. How would say, are not made liable for the liability of the entity, which is called company. Okay. Even though the business was the same and was even run by the same person, A. Solomon Company Limited was not an agent or trustee for the members. The members, who are the members? Solomon, Aaron Solomon, his wife, and all his 5 children were not liable in respect of A. Solomon Company Limited's liquidations process and all the obligations. So they are being protected with a veil. Okay. Okay, this is the slide where I've explained the company will only be closed until and unless you choose to kill it. Otherwise, it's immortal. Okay. Next. Okay, now let's go to key role players. Where are you? So you are either participants either you are the directors or you are a company secretary. And who are the other main role players? The auditors, the employees. And when the company goes into liquidation, there comes liquidators, receiver and manager. And for you to rescue the company, now we have corporate rescue mechanism. You will have judicial manager and CVA nominee. Okay. So let me go one by one. Directors. Who are directors? Section 2 defines types of directors. Okay. So if you look at Section 2, you will see a director has been defined by the person who give instructions. okay, to the majority of the corporation, whether it's an alternate director or a substitute director. Okay, in simple words, being a director is sitting in the driver's seat in a car. Being a director is being the brain of the company. Being the director means you, the person who runs the company. Okay, I love to give the analogy of a car. If there is a car, and if you look at the company as a car, the person who is driving the company is a director. The person who fills the company with food, okay, who injects money into it. Yes, siapa isi minyak? They are the members, shareholders. The person who sits next to the director, reminding the director of the traffic lights, of the roads, the changes, holding the ways, for example, is the company secretary. Okay, that is a very layman term of you understanding who are you. Okay, one question to all of you. Being a director of a company, are you an owner of a company? Are directors owners of a company? Anyone? It is okay. If it is Sendirian Berhad and you are the only director, thank you. That's a very good answer, not necessary. Now, what am I saying is a very good answer because if you are a director and you are also a member, then you are an owner of the company. What? Who is the owner of a company? Someone who is a member. Okay, so being a director does not give you the power of owning the company because you are only driving the car. Okay, clear? If you are a director and you are also a member, yes. So if you are not a director, but if you are a member and you are a minority member, are you an owner of the company? Anyone? Yes. No matter how small is your shares, you do have a say. Next. Okay, this is for you to read. For those who doesn't like to read the Companies Act, you have no choice but at least to read Section 201, Section 211, and Section 196. These are the list. Why? So you need to know, being a director in Malaysia, okay, at least if it is a private company, okay, it is a Sendirian Berhad, you are allowed to have only one director. And that one director must be a Malaysian resident. If it is a public company, you are allowed to be to have a company with only 2 directors, and both must be Malaysian residents. Okay, these are minimum. And that does not include alternate and substitute directors. Okay, so the powers, what can you do being a director? So these are general powers of a director and direct affairs of a company. 211. Okay, so okay, if you are the chairman, this is the scenario that you have. The rest of the directors are body of captains and you are the captain. Okay, so let's look at the one sitting next to you in the car, your chief administrative officer, who is a natural legal person, who is not only the owner of the management services provider, but is a person named in your company as a company secretary. Where you can find that in the register of secretaries. When you make a company printout, in the list of company secretaries, it must appear. When it comes to notification and lodgement, in form 58. Okay. Okay. Form 58 also a notification of any changes of directors, company secretaries, and managers. Okay. As I explained before, okay, for company secretaries and for directors, be clear that a company secretary must be a natural person. You must at least have one person. Okay, at least 18 years old and naturally resides in Malaysia. Okay, one question to all of you. Can I choose to incorporate a company and not without a company secretary? Yes or no? Why or and? Can I choose to incorporate a company without a company secretary? Okay, I have yes and I have no. The answer is both yes and no. Okay, when it will be yes, you are allowed to incorporate a company without a company secretary. Okay, you can do it by yourself. A director can use micro ID to incorporate a company. However, within certain period, within X days, you must appoint a company secretary. Another question, within how many days? Okay, thank you, Andrew. Within 30 days. Okay, so you have a choice. If you couldn't find a company secretary, but you wanted to incorporate a company by yourself, so you can go to this. We have a slide here, micro ID. Okay, I'm not going to talk in detail about how the system works, but this is a platform for you to incorporate a company. Being a director yourself, you may incorporate it, but within 30 days, not 1 month, because 1 month can be 28 days, 29 days, or 31 days. Okay? The Act says within 30 days, you must appoint a company secretary. Okay? Or you can also seek for a company secretary to help you to incorporate a company. So the choice is yours. Okay, let's go back to company secretary. Okay, we have covered this. And the auditors. Remember my explanation, the difference between an audit firm and a company secretary. Okay. Auditors work as a watchdog. When I say a watchdog, it is watchdogs functions to bark, to alert, to be an alarm to you. Okay. Normal auditors, I'm not talking about investigative auditors, okay, they does not perform the role of a bloodhound. Okay, bloodhound is a species of a dog that goes and it's more fierce. It does not bark, but it goes and bites you. Okay, but the concept of having an auditor is like having one external eye that watches you, that alerts you, and that says you need to comply to the standards required when it comes to preparation of the financial statements. Okay. Without reading the Act, allow me to explain why you need an auditor. Okay. A company secretary is an officer of the company. A director is an officer of the company. A manager, your employer, all officers of the company. But auditors are not an officer of the company. Why? They need to be transparent. They need to have no conflict of interest with the company. So let's look at the financial statements. When you prepare a financial statement of the company, it is the director's responsibility to appoint an accountant to prepare the financial statement. And that financial statements need to be circulated to the members. of the company. Who are the members? The owners of the company. And later on, that particular financial statements, okay, before you circulate, you must audit. Okay, so audited financial statement. Okay, step 1, preparation of this financial statement. Step 2, audit of the financial statement. Step 3, circulate to the owners who are members of the company. Step 4, lodge the auditor's financial statements to the registrar. So in simple words, what are you doing as a director of the company is letting the owners of the company and the entire public knows what have you done with the company for that counting period, for that particular year. You are letting the owners know, you see, you have given me a sum of money and I have used this sum of money to run the business, and these are the transactions of my expenses and the income that I have earned through using your money. A conversation between a director and the owners, the members. Okay, conversation. And you being a director, letting the entire public, okay, if it is when you launch a company document to the registrar, it becomes a public document. So it is also a conversation between you, the director, that you are letting the public know about the way you manage a company's fund. Okay, and financial statement, auditor's financial statement includes auditor's report, and it can includes director's report. Okay, so from that, the public who makes a public search will have an idea of what is the company doing, how well the money of the company have been managed by the directors, and what does the auditor says about it. Okay, so it is the responsibility of you, the directors, to appoint an accountant, not an auditor, to prepare the financial statement. It is the responsibility of you, the director, to appoint an auditor who is not your accountant to check the financial statement, and to appoint a company secretary to circulate that to the owners and to table it in the annual general meeting if it is a public company, or if you choose to have AGM, and letting the owners know. And it is the responsibility of the directors to lodge it to the registrar and to let your company's financial statements, a little bit of the business, to be known to the public. Okay, this is the big idea. I'm giving this idea for the new directors because I know if you read the Companies Act, it might not help you at this stage if you're very new. It's good. I encourage you to read the sections, but it is also very important for you to understand, to get the bigger picture, to have the eagle eye view of the role players of the company. Okay, next. Yeah, I have covered this. This is all about micro ID. Okay. These have been covered. Remember, how do you know when whether it is a Sendian Berhad or Berhad certificate of incorporation? If you don't have it, it will be sent to you through email. Okay, so you need to check with your company secretary. I've covered this. Okay, now we are going through how many types of company. You have incorporated company. We're very sure the entity is a company. So how do you know what type of company is it? Look at the name of your company. If it has the word SDN, Sendirian, it is a limited company. Okay? Sendirian Berhad. If it only has the word BHD, Berhad, it is limited by guarantee. Okay? If It only have the words, only have sendirian, no berhad. It is unlimited. Okay. What if you have ABC sendirian berhad? It can be ABC sendirian berhad must be a company limited by shares. Okay. Okay. How do you differentiate a private company and a public company? A public company will have the word berhad. It is not sendirian. Dia bukan sendirian. Okay, that is the reason behind the word sendirian. It's not a law. It's for the public. But it is limited. That is why you have berhad. So if it's a berhad, it is public. How do you know a public company is listed or non-listed? Okay, so you have to check with your company secretary whether the company has been listed under the Bursa requirements, whether it's a main requirement, okay, main listing or not. Okay, so now how do you know what type of private company do you have? Okay, a Sendirian Berhad company can be an exempt private company or non-exempt private company. Okay, even though you can't see that through the name of the company, a non-exempt private company means, okay, let me explain about EPC. Okay, the people love to use the word EPC. In simple words, EPC means you are a private company and you are given an opportunity not to let the public know about the financial statement of the company, i.e., you are allowed not to lodge your financial statement to the registrar. But you must prepare the financial statement. When you prepare, you must have a certificate given by the auditors. But this is not a forever status. You need to follow. Okay, you need to obtain conditions. Okay, the conditions is your private company must not have any corporate shareholders. All shareholders, all members are individuals, and the owners, the members are limited to 20, not more than 20. Okay. So what are the differences between a private company and a public company? A Sendirian Berhad and a Berhad. If a private company, you are not allowed to offer shares to the public. Okay, you must be a berhad. You cannot when you want to transfer shares, you need to have directors' resolution. See, there are restrictions to transfer shares. Okay, and the shareholders, the owners, must be limited to 50. Okay, a foreign company. Okay, why is missing that? Sorry for that. Okay. Foreign company is a public company. So how you differentiate a foreign company and a local company? Foreign companies is a company which was incorporated not in Malaysia, but it has a business and carries business in Malaysia. Okay. What else? Company limited by guarantee. Okay, ladies and gentlemen, what type of company is a CLBG? Company limited by guarantee. What type of company is it? Anyone? What type of company is a CLBG? A company limited by guarantee. I know it is limited by guarantee. I need more explanation. Thank you. No share capital. Non-profit organization. Yes, Yayasan is one of it. Okay, so you must know that the moment it has the word Sendirian Berhad, it is not a company limited by guarantee. It may or may not have the word Berhad. Okay. Next, powers of a company. Okay, this has been covered in the previous slide when I explained the differences between a business and a company. Okay, so for you to read section 21. Okay, decision making. Remember the analogy of the car, and you are the driver, and the one who fills the oil for the car is a shareholder. Okay, so this is what I have explained. So decision making is the director's duty. Okay, so director determines and manages, runs, supervises the business, and shareholders exercise the rights of they do have a say of how you manage the business. Okay, that is why when it comes to AGM, okay, you have AGM here, meetings, huh? When you have an AGM, when you hold an AGM, especially if it is a public company, who attends the AGM? The members, the owners. Who will be sitting in front, presenting the financial statements, audited financial statements? The directors. So what is the most common questions the members ask you? Other than, do we have parking fee? Why is the director's fee so high? Correct? Another famous question, do we get dividends? Okay, why? Because they are the one who injects money. So when you look at meetings, how many kind of meetings that you have in a company? Number one, when you incorporate a company, no matter it's public or private, you must have the first board of directors meeting. The moment where the brain sits and think and organize and plan, what am I going to do with this entity called a company? Okay, in the first directors meeting, you need to do the planning to decide when it's the accounting financial year of the end, when to appoint, who is the accountant to be appointed. Okay, to when you should start opening a bank account. Okay, and then when you have to, within 18 months, okay, you must have an AGM. If it is a private company under the current act, you are allowed not to have an annual general meeting. Okay, but if it is a public company, either company limited by shares or company limited by guarantee, you must hold a meeting which involves you, the brain of the companies, and the owners of the company, which are general meetings. Okay, these are meeting of members. The annually conducted members meeting is called annual general meeting. And you may also have meetings that needs to be conducted not annually. That is called general meetings and class meetings. Class meetings are meetings of shareholders. Okay. So here, okay, when it comes to first board of directors, okay, now allow me to talk about constitution. These are at the slides before. You must decide whether you want to have a bylaw for your company or not, a house rule. For example, if you want to decide not to have a constitution, okay, it was known as memorandum and articles of association under the previous act, but now we have it as constitution. If you choose to rely 100% with the Companies Act, you may do so. But if you choose to have a more stringent rules, for example, you want to specify who can sit in the board of directors of your company, what is the quorum for a meeting, what are the qualifications for directors to be appointed as a director in your meeting, it's good for you to have a constitution. Okay, you have it here. Don't get confused with the slides. Okay, this is what is a constitution. Constitution means a house rule of a company. It can be more stringent than the Companies Act, but should not go against the Companies Act. For example, if you have a rule that before you enter your house, you must remove your shoes before entering the house. Okay, just say that is requirement under the Companies Act. Under the Constitution, you may specify as you must remove your shoes and put the shoes on the shoe rack before you enter the house. You see, you cannot have a constitution that allows you to walk into the house with shoes on when the Companies Act says you must remove the shoes. Okay, so those are layman explanation of a constitution. Okay, it's a more stringent house rules which should not go against the Companies Act, but can be more stringent. It is for the benefit of the company. Any questions? No question, okay. AGM, remember we talked about AGM? AGM, okay, 340 talks about AGM. For the first year, for private company that choose to have AGM, and for public company that must have an AGM, it is an annual meetings for the members to know about what have you done with the company for the first 18 months first, then subsequently held within 6 months from the financial year end. Okay, you can see on what business can be transacted. Number one, you lay the financial statements. Okay, you tell, as I explained before, you tell the members what have you done with your money. And you elect the retiring directors. Every directors will retire and can be re-elected yearly, annually. So that vote can be done by the members. When you appoint or reappoint your auditor, whose duty is it? Who has the power? The members. Okay, and other businesses. You can see other businesses such as issue shares, payment of directors' fees and benefits. Okay. Remember when I explained about financial statement, how you present it? Okay, these are the detailed part of it. Okay, I have explained that you must prepare 248, you must circulate 258, you must lodge 259. Okay, one question to all of you. If you are the Sendirian Berhad, a private company, can you choose not to circulate your financial statement to the members? Can a Sendirian Berhad choose not to circulate the financial statement to the members? Because you can choose not to have AGM. Okay, you can say, I don't want AGM, it's all okay. Why not? Okay, someone says, Andrew, good, that's a correct answer. Why a private company is only allowed not to hold an AGM, but are still required to circulate the financial statement to the members? Must circulate, correct? Why? Anyone? Any senior company secretaries? Oh. Anyone? Why you are not allowed not to circulate? Nobody knows, right? SSM will never know. Am I right? SSM will not know if you choose not to circulate it, because you are no more allowed to have to lodge your annual return and your audited financial statement together. And the wording in the annual return is no more like before. You are not making any declaration. Okay, someone says must circulate is declared in the financial statement. Okay, it's declared. Let's be more practical. You must, being a director, you have the responsibility to let the owners know, to be transparent of what have you done with the company's money during that financial year. Transparency and accountability. Thank you, Andrew. Okay, that is the reason you must circulate. Okay, this one. We have covered many things. Let's go to audit exemption. Okay, ladies and gentlemen, please be extra cautious when you read this slide. This slide belongs to Training Academy, but unfortunately, today this slide is not updated when it comes to audit exemption. Okay, for 31st December 2024, until then, Practice Directive 3 applies. Okay. Practice Directive 3 2017 is revoked after we have a new Practice Directive for audit exemption, which is Practice Directive 10/2024. Okay, how do you know when to use this and when to use the new one? Okay, in a simple form, okay, I will say for financial statements and financial period commencing before, okay, I'm reading Practice Directive 10/2024, okay. To avoid any doubts, the Practice Directive 3/2017 shall continue to apply to financial statements with financial period commencing on or before 31st December 2024 only. Okay, for those after that, starting from 1st January 2025, you can no more rely on this. Okay, except for dormant companies, yes. Okay, in simple form, audit exemption means you are allowed not to audit the financial statement, but you must lodge the unaudited financial statement to SSM, and this only applies for private companies. Number one. Okay, whether it's previous PD3 or the current PD10. Number two. Okay, that means you must be a public company. Okay, not a foreign company. So you must be a private company, not a public company. And you must be a private company which is not a subsidiary of a public company, not a foreign company. And one more is, okay, those qualifies you for an audit exemption. Okay, for what? Can you choose not to prepare a financial statement? Can you choose not to have accountant? No, you must prepare it. But you can choose not to appoint an auditor and audit the financial statement. What are the criteria? Okay, this one, please read with caution. No revenue is no more applied. Now, you may have a revenue of 3 million. Okay, a minimum of 3 million. And no revenue in past 2 financial years also doesn't apply. Okay, total assets does not exceed 300,000 does not apply. It has been increased to 3 million. Okay, so please read Practice Directive 2024, starting from 1st January 2025. Okay, so I'll read this here. Okay, threshold. Okay, what I will highlight what does not apply anymore. Okay, revenue is not exceeding 3 million, no more 100. It has been increased. Total asset not exceeding 3 million, not 300,000. Okay, employees can be not more than 30, no more 5. Okay, so we understand the previous qualification for the exemption is too stringent, so we have increased it. Okay, and this one, please correct the slide. Okay, who can audit director by members? The members, when you choose to not to audit a financial statement, the members do have a say to ask the company to audit. And you may choose, I don't want to audit. But there are situations that allows members, the owners, to have right to say, you must audit. So who are the person eligible? Members with 5% of issued shares. This one remains same with the current PD. At least 5% of total number of members eligible to vote. And we, SSM, can also choose to ask you to audit the financial statement. Okay, so this needs to be changed as well. Please read the current PD. Certificate is the same, but what changes is the points there. No more zero revenue. Threshold will be increased. We have 3 years of threshold for 2025, 2026, and 2027. Okay, the threshold will increase. Where can you find it? Go to our website, Legal Framework, and you can find Practice Directive 10/2024. Please take note. Okay, starting from 1st January 2025, this PD does not apply. Okay, for the those with financial period 2024. Okay, this one I have covered. Voluntary winding. Okay, winding up. Okay, a little bit of winding up. I still have 5 more minutes to go. Remember, when you have a company and when you have a business, what differentiate when your business, when the entity goes really sick? If it is a senior member hard, it will never die until you kill the entity. If it is a business, well, it automatically closed once the business ceases. So let's go into the situation where your business is really sick and you need to close the business so that it dies peacefully. Okay, so you being a director have the responsibility to pay the owners according to the amount of shares. Before that, what you must do? Use the assets of the company to pay off the liability. Okay, I am summarizing it in a very layman way of explaining. Okay, you can choose to seek for the registrar to help you to wind up, to strike off the company, how to close the company. Okay, a director may apply to the registrar. So if the company has no assets and no liabilities, you may strike off the company. It is called striking off. But if you do have assets and liability, you need to choose to wind up a company, either by voluntary winding up, which involves either a creditor, it is creditors winding up, or a member, it is a members winding up. Both creditors and members winding up are voluntary winding up. In simple words, you need to seek the opinion, a say from the members, the one who inject money as a shareholder, and from the creditors, the one who injects money as the one who lend money to the business, to have a say in the process of closing the company. Okay, if the company is solvent, you must need the have a say from the members. If it is insolvent, you need to involve the creditors. If that cannot be done, you must seek for the court to interfere, which is called a compulsory winding up. Okay, so in a nutshell, that is how you close a company. So who is your best friend? your company secretary, please seek advice on the process of closing the company. Remember, it is your duty, starts from the incorporation of a company until the closure of a company. Okay, so these are the detailed process of how members voluntary winding up need to be done. Okay, so the differences are either you involve it is solvent, you go through this process. If it is insolvent, you must involve creditors. Okay, this is when you seek advice, seek the interference from the registrar. Okay, SSM's power to close off the company. Okay, ladies and gentlemen, allow me to recap. Any questions? Let me see that. Okay, allow me to recap. We started with the history, where is SSM and how does a company works, key characteristic, okay? ROC and ROB. Where can you find the powers of SSM? What are the acts administered by SSM? Remember, SSM's power is by through is not in Companies Act but under SSM Act. Okay, this is where you can find SSM offices. Okay, how to differentiate a company? It must be incorporated under Companies Act. Okay, this is the case law of that defines a separate legal entity under section 20 and 21. A company never dies until you choose to kill it. Okay, differences between a business and a company, a lifespan of a company. Okay, who are you in a company? What are your roles? Auditors are not officers. Company secretary are the one who sits next to you in a car, and you as a director is the brain, and you are the one who drives the car. Okay, and detailed part of it will be covered after lunch. Okay, that is more on your responsibility as a director. Okay, we have covered about a little bit of what is a director, who is a company secretary, what are the roles of auditors, how can you incorporate a company without a company secretary, what is the platform, and when must you appoint a company secretary, and what is notice of registration, what are the types of companies, I have explained this, the powers of a company, the shareholders and board of directors, the owners and the brains and the owners, the M&A, the constitution, the bylaws of a company. Okay, this is also the bylaws. Okay, and type of meetings we have covered. Board meetings. Okay, when to hold annual general meeting, what must you do? Can you or can you not circulate the financial statement? Why is it very important for the directors to ensure financial statements are circulated? Okay, audit exemption, please read this with the latest practice directive 10/2024 that was dated 16 December. Okay, this does not apply for the companies with financial year not until 31st December 2024. Okay, this need to be updated. Training Academy will do the necessary. Okay, so what else? Okay, annual return and financial statements and how to close the company. Ladies and gentlemen, do you have any questions? I believe your next session starts at 11. Okay, with Encik Lokman from SPRN. Okay, thank you, Andrew. I'm still here, a few seconds for any more questions. If no, give me a smiley so that I can say a bye-bye. Thank you. Sama-sama. Okay, see you again in next sessions. Enjoy the entire CDTP back to contract. Okay, sir?
Alright, thank you so much, Cik Shamila, for informative session. Ladies and gentlemen, we will stop for a short break until 11. Kindly do not need to log from Zoom meeting. Thank you and stay tuned.